Coinbase Asset Management, CBAM, and iTrustCapital have announced a pioneering collaboration to introduce a Bitcoin yield strategy tailored for individual retirement accounts, IRAs. This strategic partnership allows accredited investors to integrate CBAM-managed Bitcoin yield opportunities within tax-deferred IRA accounts, potentially enhancing retirement savings through compounded tax-free growth. iTrustCapital, a leading U.S. provider of self-directed digital asset IRAs, and CBAM, a subsidiary of Coinbase Global, bring together their expertise to offer institutional-grade yield products capitalizing on Bitcoin's reputation as digital gold and its role as a store of value. This initiative follows an executive order signed in August by the Trump administration, which supports the inclusion of actively managed crypto strategies in retirement accounts. The move is significant in the landscape of digital assets, as it underscores the growing institutional acceptance of cryptocurrencies as viable investment vehicles for retirement planning. The integration is anticipated to launch between Q4 2025 and Q1 2026, reflecting a broader trend of increasing crypto adoption among traditional financial products. The partnership aims to provide investors with enhanced asset protection and flexibility, potentially reshaping how digital assets are perceived in long-term investment strategies.
Illinois Governor J.B. Pritzker and his wife reported a substantial increase in their taxable income for 2024, totaling $10.3 million, which includes $1.4 million from gambling winnings. This marks a significant rise from $3.2 million in 2023 and $2.3 million in 2022, representing their highest reported income in several years. Much of Pritzker's wealth is held in various trusts, which are managed by Northern Trust Company to avoid conflicts of interest. Although some experts argue the arrangement is not entirely blind, the partial tax disclosures reveal that the Pritzkers paid $1.6 million in federal taxes and $512,120 in state taxes. Additionally, the trusts paid $4.5 million in state taxes and $30.2 million in federal taxes. Despite the limited transparency due to partial tax disclosures, these figures offer insight into Pritzker's financial activities as he campaigns for a third term as governor. His net worth is estimated at $3.9 billion, largely derived from his inheritance from Hyatt Hotels Corp., which he has used to support political campaigns and democratic causes nationwide. The Pritzkers also increased their charitable donations to $3.3 million in 2024, doubling their contributions from the previous year. This financial disclosure highlights Pritzker's complex financial landscape and his ongoing efforts to balance political ambitions with personal wealth management.
Nordea Investment Management AB has significantly increased its stake in Citizens Financial Group, Inc., NYSE CFG, boosting its holdings by 20.7% during the second quarter of 2025. This move, detailed in a recent SEC filing, saw Nordea acquiring an additional 1,098,684 shares, bringing its total to 6,399,905 shares valued at approximately $287.9 million. This increase in holdings reflects a broader trend of institutional interest in CFG, with 94.9% of the bank's stock owned by institutional investors and hedge funds. The heightened institutional activity suggests confidence in Citizens Financial Group's performance and prospects. In tandem with this investment activity, several equity research analysts have revised their ratings and price targets for CFG. Notably, Morgan Stanley upgraded the bank from an equal weight to overweight status, raising its price objective from $53 to $71. Similarly, Bank of America shifted its rating from neutral to buy, with a new price target of $65. These upgrades are underpinned by Citizens Financial Group's strong quarterly earnings report, which exceeded expectations with a reported EPS of $1.05 and revenue of $2.12 billion. The bank's decision to increase its quarterly dividend to 46 cents per share, yielding 3.8%, further underscores its robust financial health and commitment to returning value to shareholders. This strategic positioning and positive analyst sentiment suggest a favorable outlook for CFG in the coming quarters.
Values First Advisors Inc. has increased its stake in Old Dominion Freight Line, Inc., a prominent player in the less-than-truckload (LTL) transportation sector, by 4.5% during the second quarter. This move, detailed in a recent SEC filing, reflects a growing institutional interest in the company, with Value's First Advisors now holding 6,727 shares valued at approximately $1,092,000. The transportation company has seen a flurry of activity among institutional investors, with firms like Brighton Jones LLC, Gamma Investing LLC, and others adjusting their positions, collectively owning 77.82% of the company's stock. Old Dominion Freight Line stock has shown resilience, opening at $138.10, despite a challenging earnings report where it narrowly missed analyst expectations, with an EPS of $1.27 against the forecasted $1.29. The company reported a 6.1% year-over-year decline in revenue, totaling $1.41 billion for the quarter. Despite these figures, analysts remain cautiously optimistic, with a mixed consensus rating of hold and an average target price of $163.86. The company maintains a strong financial position with a low debt-to-equity ratio of 0.04, indicative of its stability in a volatile market environment. The strategic moves by institutional investors and the ongoing analyst interest suggest a focus on long-term growth potential for Old Dominion Freight Line amidst fluctuating market conditions.
Nordea Investment Management AB has increased its stake in American Tower Corporation, NYSE, AMT, by 1.0% during the second quarter of 2025, bringing its total holdings to approximately $334.43 million. This move aligns with similar actions by other institutional investors, including Vanguard Group Inc., Price T. Rowe Associates Inc., and Deutsche Bank AG, who have also increased their positions in the real estate investment trust, REIT. American Tower, a leading global REIT, owns and operates over 224,000 communication sites worldwide, making it a key player in the telecommunications infrastructure sector. Despite a slight decline in American Tower's revenue, which decreased by 9.4% year-over-year, the company managed to surpass earnings expectations for the latest quarter, with an EPS of $2.60, compared to the estimated $2.59. The company maintains a robust dividend policy, recently announcing a quarterly dividend of $1.70 per share, translating to an annual yield of 3.6%. Analysts maintain a generally positive outlook on the stock, with a consensus rating of moderate buy and a target price of $239.50, reflecting confidence in its strategic position and future growth prospects despite current market volatility.
Value's First Advisors Inc. recently reduced its stake in Amphenol Corporation by 23.4% during the second quarter, according to its latest 13F filing with the SEC. The firm sold 6,738 shares, leaving it with 22,102 shares valued at $2.18 million, representing 1.2% of its portfolio. This move comes amid a broader trend of hedge funds and institutional investors adjusting their positions in Amphenol, a major player in the electronics manufacturing sector. Amphenol's stock has shown strong performance, trading up 1.3% recently and reaching a 52-week high of $128.12, buoyed by a robust earnings report that beat analyst expectations with a 56.5% increase in quarterly revenue year-over-year. Despite the reduction by Value's First Advisors, Amphenol's outlook remains positive, with several analysts maintaining a buy rating and setting higher target prices, reflecting confidence in the company's growth trajectory. The firm recently reported a quarterly dividend of $0.165 per share, emphasizing its commitment to returning value to shareholders. Amphenol's strong financial metrics, including a net margin of 16.90% and a return on equity of 30.58%, continue to attract investor interest. The company's strategic focus on expanding its market presence across its three segments, harsh environment solutions, communication solutions, and interconnect and sensor systems, positions it well for continued growth in the electronics and fiber optic connectors industry.
Nordea Investment Management AB has increased its stake in Owens Corning Inc., NYSE, OC, by 0.7% in the second quarter, now holding 2,225,800 shares valued at approximately $305.3 million. This move reflects a modest increase in confidence in the construction materials company, which has seen other institutional investors like Archer Investment Corp. And Resonant Capital Advisors LLC also adjusting their positions. Owens Corning, known for its roofing, insulation, and composite segments, reported strong quarterly earnings with a 10% revenue increase year-over-year, suggesting robust business performance amid fluctuating market conditions. Owens Corning's stock opened at $126.29, with a market cap of $10.56 billion. Despite a slight decline in its stock price from recent highs, the company continues to exhibit solid financial health, marked by a return on equity of 24.49% and a net margin of 2.98%. Analysts maintain a moderate buy consensus rating with a target price of $178.31, although recent adjustments reflect a more cautious outlook with price targets being revised downwards by firms like Jefferies and Truist Financial. Owens Corning's upcoming dividend of 69 cents per share, yielding 2.2%, underscores its commitment to returning value to shareholders amidst these mixed market signals.
Nordea Investment Management AB has recently adjusted its stake in CVS Health Corporation, decreasing its holdings by 1.6% during the second quarter of 2025. As per the latest SEC filing, Nordea now owns 4,341,044 shares valued at approximately $298.10 million. This move is part of a broader trend among institutional investors, with several entities either increasing or reducing their positions in CVS Health. Notably, Praxis Investment Management and Callahan Advisors LLC have increased their stakes, while Harbor Asset Planning Inc. has initiated a new position. These adjustments reflect varying levels of confidence in CVS Health's performance and future prospects. CVS Health stock has been the subject of numerous analyst upgrades in recent months, with Robert W. Baird and UBS Group both upgrading their ratings from neutral to buy. The consensus target price for CVS has been set at $81.05, indicating positive sentiment among analysts. The company's recent earnings report showed a strong performance, with earnings per share (EPS) of $1.81, surpassing estimates by 35 cents, and an 8.4% increase in revenue compared to the previous year. This robust performance, coupled with a favorable analyst outlook, suggests potential upward momentum for CVS Health's stock price. In terms of financial health, CVS Health maintains a solid position with a market cap of $103.24 billion and a current dividend yield of 3.3%. The company has set its FY 2025 EPS guidance between $6.30 and $6.40, indicating confidence in continued growth. With a diverse range of operations across healthcare benefits, health services, and pharmacy and consumer wellness, CVS Health remains a significant player in the U.S. health solutions market. The recent strategic moves by institutional investors and positive analyst ratings underscore the company's potential for sustained growth and shareholder value enhancement.
Oracle Corporation's NYSE ORCL stock rating has been maintained at Sector Perform by RBC Capital, following the company's ambitious growth targets unveiled at its 2025 Analyst Day in Las Vegas. Oracle aims for $225 billion in revenue and $21 earnings per share by fiscal year 2030, driven by its Oracle Cloud Infrastructure (OCI) business. Despite these optimistic projections, RBC Capital described the targets as aspirational, maintaining a price target of $310, which implies a 43x multiple on its 2026 estimated EPS. Oracle's stock, trading at a high P/E ratio of 72.5x, fell approximately 3% in after-hours trading post-presentation, yet has shown a 144% return over the past 6 months. Multiple financial firms have updated their price targets for Oracle, reflecting confidence in its cloud and AI growth strategies. Stephens raised its target to $331, while Piper Sandler increased it to $380, citing Oracle's ambitious revenue goals. KeyBank and Cantor Fitzgerald reiterated targets of $350 and $400, respectively, emphasizing Oracle's cloud infrastructure growth and AI profitability. Scotiabank also raised its target to $360, noting significant new customer commitments. These updates indicate a positive market sentiment towards Oracle's long-term strategy, particularly in cloud computing and AI, despite some analysts' caution regarding OCI profitability and AI monetization.
California Governor Gavin Newsom has vetoed Senate Bill 791, which aimed to increase the fees that car dealers in the state could charge buyers for processing paperwork, from the current cap of $85 to up to 1% of the vehicle's purchase price, with a maximum of $260. Newsom's decision was influenced by the view that the proposed fee hike was excessive and unjustified by inflation, especially given the existing high cost of living in California. The California New Car Dealers Association expressed disappointment, arguing that the current fee is among the lowest nationwide and that the increase was necessary to cover the costs of compliance with state regulations. In contrast, Newsom signed Senate Bill 766, introducing a groundbreaking policy allowing used car buyers to return vehicles within 3 days for a full refund if the purchase price is under $50,000, albeit with a restocking fee. This law, effective October 2026, aims to enhance consumer protection by mandating full disclosure of costs and prohibiting charges for non-beneficial add-ons. The dual actions reflect a balance between protecting consumers from excessive fees and ensuring transparency in car transactions, potentially impacting dealer operations and consumer confidence in the automotive market.